Hey guys, Brian here. Welcome back to the channel. And you've probably heard the term decentralized finance or DeFi a lot if you've been following cryptocurrencies. Consumers and billionaire investors alike are taking notice of the burgeoning peer-to-peer crypto network, which is quickly becoming a standard component of any crypto portfolio. But before we start, as I always say, that it is important to note that I am not a financial advisor and everything in this video is not financial advice. So let's start with what exactly is DeFi. DeFi is an abbreviation of decentralized finances based off cryptocurrencies or a blockchain that aims to eliminate financial intermediaries. It is inspired by blockchain, a technology that supports digital currencies such as Bitcoin. As blockchain allows multiple organizations to store a copy of transaction history, ensuring that it is not controlled by a single intermediate source. That is important because centralized systems and human gatekeepers can minimize and make things worse while giving users more direct control over their finances. DeFi is unique because it expands blockchain use in addition to easy asset transfers to complex financial applications. Let's do it this way, that Bitcoin and many other digital goods differ from traditional digital payment methods such as like Visa or PayPal just because they exclude all the transactions. So if you pay for a coffee in a cafe with a credit card, the financial institution stays between you and the business. They control the transaction and it reserves the right to suspend or record it in its register. Those institutions are no longer compatible with Bitcoin. Now we talk about the advantages of DeFi. Its main advantages is it eliminates mediators of all types of transactions. The DeFi concept was once known as open finance before it became known as decentralized finance. So decentralized finance uses technologies with the objective to disintermediate all the centralized models that provide services to anyone regardless of race, age, or cultural identity. DeFi services and applications are usually based upon public blockchains and can replicate existing products built on standard technical standards or provide novel services designed for the DeFi environment. Further, DeFi programs, on the other hand, give users more control over their money and offering wallets and trading options designed for individuals and not institutions. Now, talking about what makes up DeFi, DeFi components are similar to those in the current financial environment in that they require stable finances in a range of different utility cases. So stablecoins and services such as crypto exchanges and loan services are example of DeFi items and smart contracts that provide a framework for DeFi applications to operate as they incorporate the terms and conditions required for these services to operate. So the smart contract code, for example, includes a custom code that specifies the specific terms and conditions of each individual loan. The deposit can be closed if certain terms or conditions are not met, and all of this is done by code and not by a bank or another organization by hand. So further talking about DeFi software, it stacks and contains all the components of a distributed financial system. The components of each layer are designed to achieve a specific purpose in building a DeFi system. Stability is a distinguishing feature of the stack because of the components from each section can be combined to create a DeFi application. Go over what a stack is. So DeFi stack is composed of 4 layers. And I recommend that you guys re-watch this if this is going over your head, because I'm going over a lot right now, but let's just continue going. The first one is the settlement layer, or as it's known as layer 0, because it serves as a base layer for every transaction made. It includes a public blockchain and a digital currency or cryptocurrency. So this money, which may or may not be sold on the public market, is used to pay for transactions on DeFi applications. Ethereum, in its natural token, Ether, which is ETH, traded in crypto trading, is an example of a settlement. So types of token goods such as the US dollar or digital tokens of real world assets may be used in the payment platform. A real estate token, for example, could represent ownership of a piece of land. Then comes protocol layer, as DeFi agreements are interoperable, which means they can be used by many businesses to create an app or application at the same time. This protocol layer provides DeFi's natural credit. Synthetics, a trading platform available based on Ethereum, is an example of a DeFi protocol. It is used to make digital duplications of real-world objects. After that comes the third one, which is the application layer. And as the name suggests, it is a layer of an app where the customer-facing programs reside. These applications deliver basic agreements to simple customer-focused services. The most common application in the digital finance system, such as chemical exchanges and lending services, reside on this layer. And then finally comes layer 4, the aggregation layer. And this layer connects multiple applications from its previous layer to provide services to investors. They may, for example, be able to make money transfers between different financial products in order to increase profits. So such as trading practices will require a lot of documentation and proper connectivity. The technology-based structure, on the other hand, should be a smooth investment platform, allowing traders to quickly switch between different providers. In the realm of integration, borrowing and lending are two examples of the services. Other examples include banking services and cryptocurrency wallets. So now that I went over all that, I'm sure it was a little bit confusing, but I hope it's starting to clear up about all the DeFi components. And now come layer ones. As you may have heard the name because recently lots of layer ones have mooned, such as AVAX, Luna, and now Phantom is also following. So what basically is a layer one? Usually a blockchain referred to a layer one network is a decentralized ecosystem. Layer one blockchains include Bitcoin, Litecoin, and Ethereum, for example. And in order to achieve scalability, layer one scaling solutions supplement the blockchain protocol's foundation layer. A variety of techniques that directly increase the scalability of the blockchain networks are now under research and use. So layer one solutions alter the protocol's rules in order to enhance transaction capacity and speed while simultaneously accommodating additional users and data. To enhance the total network throughput, layer one scaling options might include increasing the amount of data included in each block or speeding up the pace in which blocks are validated. So now finally, we're going to discuss the major DeFi use cases which make DeFi so important for the world. So here are some of the most essential use cases, and the first one is insurance. One of the most important financial businesses is insurance, and that has already been proven to be one of the most important DeFi use cases. The existing insurance system is clogged by mountains of paperwork, antiquated auditing systems, and cumbersome insurance claim procedures. And the number 2 use case is analytics and risk management tools. And as users were able to discover and evaluate an unprecedented quantity of data because of transparency and decentralization, users may make well-informed company decisions, uncover new financial possibilities, and improve risk management strategies with access to this data. And then another one of the most important aspects of the DeFi ecosystem is asset tokenization. On the blockchain network, tokenization is a process of creating, issuing, and managing digital assets. Because any asset can be tokenized and kept on a blockchain, it effectively creates a new ecosystem. But then last but not least is the trading platforms and tools, as trading is one of the most basic financial instruments that has been used since the dawn of civilization. The advent of the DeFi ecosystem, on the other hand, has opened the door to a slew of new trading opportunities. Crypto trading, margin trading, derivative trading, NFT trading, and other emerging forms of trading are all examples of this new type of trade. Finally, we could say that non-bank or non-banking services from the beginning was also a great incentive for DeFi, as DeFi's internal features make it ideal to deal with problems with today's global payment system. Compared to the older systems, DeFi offers a much faster, safer, and more transparent method. The DeFi-based blockchain and payment systems may be attractive to non-bankers because it reduces the need for intermediaries, making payments easier and more transparent. And also, while we are in this crab bear market that is happening right now, DeFi is one of the best ways to make money in this type of market. A lot of people think cryptocurrencies, you're just making money off the value of stocks going up or losing money on it going down. But with DeFi, you're actually able to stake and yield farm what you already have and gain a certain amount of APY, APR, some sort of interest on the value of money that you have in there. That is one of the best ways to increase the amount of money you are getting. And with crypto, you're not getting bank percentages like less than 2%. You're not even getting the S&P 500 types of like the 8% a year. You're basically almost guaranteed to get 10% or more on DeFi ecosystems and DeFi protocols if you are doing it correctly. So that concludes today's video. I know this was a lot of information to take in, but I definitely want to put out a lot more general information, a lot more knowledge type information on this channel. So I hope this was very easy to understand. And if you guys have any questions regarding any of this, check out the Patreon down below, where I have a Telegram where I go over all of my trading, all my strategies and any info that you guys want to know about. Let me know in the comments if you have any more questions on decentralized finance. And now if you found any of the content helpful, please don't forget to drop a like on this video and subscribe for more videos just like this. And thanks guys for watching, and I will see you guys soon. Peace.